Hey guys, today I'm doing a special to cover the EOS launch, an exciting time for us decentralized platform enthusiasts. And if you are one of them too and like this video, then please like and subscribe. A new upload every Tuesday on blockchain related stuff. So let's get straight into it. Let's start by reminding ourselves why EOS is such a big deal. Well, firstly, EOS has a great team behind them, and most specifically Dan Larimer, the creator of BitShares and Steem, already $1 billion markets. He has serious tech creds by inventing the concept of delegated proof of stake, which is the key technology which is arguably the differentiator to Ethereum. Who cares? Well, anyone running a decentralized app will care. Consensus, i.e. the delegated proof of stake, is the limiter to how quickly a distributed app can actually run. Putting it into context, Bitcoin runs 2 to 3 transactions per second, and Ethereum does 10 to 20 transactions per second last time I checked. EOS will do 1,000 transactions per second on its first day, climbing to about 30,000 per second once the training wheels are actually taken off. And it can do this because if instead of the roughly 18,000 nodes that approve Ethereum smart contracts, EOS's DPoS has 21. There's simply less computational requirement. Now, if you compare that to applications today, Facebook does about 52,000 likes per second, and that's just likes. So we're not going to be running global consumer-facing software on any distributed platform anytime soon, even with EOS. But it is still plenty fast enough to run most business software. So there's a few problems. What about decentralization then? And the key to trusted decentralization is who becomes one of those 21 instead of 18,000 validating nodes. And obviously 21 sounds quite centralized, but in reality it's not. Bitcoin and Ethereum are really run by large mining pools, groups of computers that choose to operate as a team to mine. And in Bitcoin, 24% of all transactions are approved by BTC.com and 17% by Antpool. And there are 4 other mining pools, all with around 10%. So realistically, Bitcoin is controlled by 6 organizations. Now, Ethereum has 2 major mining pools, Ethermine and F2Pool, which make up about 50% of all the transaction approvals. That is centralization, and it enables miners to pull some pretty cheap moves too. How about ignoring a transaction until the owner issues a second transaction, then a miner processing both and collecting the gas, i.e. the ether, for the 2 transactions, doubling their income? Happens all the time. So 21 parties involved in mining or validating is looking pretty decentralized to me compared to its competitors. Obviously, Ethereum is not lying down and dying. Ethereum could theoretically catch up, and it has plans to. Casper is the change from proof of stake in Ethereum. Oh no, Casper is the change from proof of work to proof of stake in Ethereum. So Casper code 0.1.0 has been released in early May, and that's a signal that it might finally happen since its announcement in 2015. It's been suggested that it will form part of the Metropolis Constantinople release, but it doesn't have a date yet, but I'm expecting around late 2018, early 2019. However, this version of Casper is still pretty half-baked. Proof of work remains the dominant consensus algorithm, but Casper will provide the proof of stake-driven checkpoints to reduce the size of the Ethereum blockchain that nodes have to deal with, which is now over 400 gig. Casper will come as a full proof of stake in the Serenity release, which has no date yet, but let's say we measure it in years, not months. So the next option for speed for Ethereum is Plasma. Ethereum's sharding technology. Sharding is kind of like the Lightning Network for Bitcoin. The Lightning Network connects 2 parties directly together, and they resolve multiple transactions between themselves without anyone knowing about those. And when those transactions are complete, it just publishes the final differentiation onto the blockchain. So it means the core proof of work mining doesn't need to happen, and hence it promises to be super fast. But although Vitalik has said that this is his primary activity at the moment, there are absolutely no timelines for this to be deployed. But given the progress of Casper, I'm not actually holding my breath. Basically, I think it's too late. EOS will have been established for a long time by then, and these improvements will be a big differentiator to Ethereum. So, how could Ethereum have let this happen? It just it just isn't easy to update blockchains once they're deployed. Look at Bitcoin, that's the best example. We know it's limited in speed, and in December 2015, the segregated witness or SegWit update was proposed, which would change transaction malleability and enable second layer protocols to support the Lightning Network. Instant speed. Now, all we need to make Bitcoin work much, much faster was for people to adopt SegWit by downloading some code and installing it on their mining servers. And there is the issue. People are already invested in how Bitcoin runs currently, and they don't want to rock the boat. And the same goes for Ethereum. Proof of stake will effectively reduce mining costs, and therefore I expect miners to be reluctant to agree to changes. It's not as simple as that, but you get my point. There's a vested interest already. And with vested interest means, well, disagreements. Hard forks will be coming. Now, talking about money, another incredible part of EOS is the investment to date. So $4 billion of Ether, to be exact. Yes, it had a number of private investors early on, but its real big bucks were raised through an ICO through its one-year-long Dutch auction. And it's fascinating, really, because when you buy the ERC20 tokens on Ethereum, there's a big disclaimer saying that these tokens are worthless. They only hold value when converted into EOS tokens and deployed on the EOS blockchain. Then they're actually worth something, as they represent the hashing power of the network and can be loaned or sold at higher prices than you bought them for when people want to run applications on top of EOS. It's like their gas. However, Block One, the developers of EOS, have said that they will not be running the EOS blockchain. This means that other people in the communities will start it off. But, wait, does that mean that there are going to be more than one EOS? Well, potentially. What happens if multiple people start multiple EOS blockchains? What happens to your EOS tokens then? Will they be honored onto all EOS deployments? I don't know. I guess we'll find out in the coming weeks following today's launch. A big question then is, what is EOS going to do with its $4 billion? And I'm pretty sure Block One doesn't need that much investment. So what's going to happen? To figure that out, there are some interesting facts you should be aware of. The first is that Ether is likely to be reinvested into companies that are building applications on the EOS network, which is a worthy cause to help promote EOS itself. And I somehow love the idea that competitors' currency can be used to build up your own network, which it's then going to take over. It's beautifully ironic. But they could also do something much more drastic with all that Ether, depending on how evil they were feeling, or maybe competitive. What would happen if they just dumped it all back into the market by selling it all? The price of Ether will crash due to oversupply. Now, this would make Ethereum even less attractive to developers and investors and companies using Ethereum. Yes, EOS would lose money in the short term, but if it was the only decentralized app platform out there, then that $4 billion would look tiny in comparison to the entire market, which they would basically own. If it did that, what an incredible coup de grace. We will see. So, in summary, what have we talked about today? The EOS launch is a big deal. It's a blockchain decentralized app platform that is set to rapidly outpace Ethereum, its only current main competitor. It seems more decentralized by nature of the delegated proof of stake protocol, which makes it around 10,000 times faster than Ethereum when it's at full speed. And although Ethereum has speed improvements in the pipeline, it's unlikely to catch up with EOS anytime soon because of how difficult it is to deploy upgrades to blockchains. EOS's launch today sees the culmination of that $4 billion investment round, and it's all in Ether. And we're all on the edge of our seats, waiting to find out what they're going to do with that cash. Maybe play nice, maybe not. Interesting times. And that's it today. I'm off to the London EOS Meetup Group's launch party to grab some merch and raise a glass to the EOS folks that are making all of this happen. It's much appreciated. Smash that subscribe and like button, and I'll see you again on Tuesday. Take care. I'll see you soon.